should be able to hear you, man. Yeah, go ahead and talk, Dick.
Yep. You hear us? Shante?
Yeah.
All right.
All right. You can hear me clear?
Yes.
All right. That works.
You can share screen, whatever you want to do.
All right. How many people do we have over there?
Right now we have 6. I'm expecting 4 more, and there's a bunch of people going to be online here as well.
Okay. Do you want me to start now, or do you want to give me them a few minutes?
Yeah, we'll give a few minutes.
Okay. I can barely understand a word of what you just said.
I'm near my computer.
Oh, okay.
We're going to go ahead and get started.
Yes.
Okay.
Any problem, the questions, we have a number you can listen on your phone if you want to listen to your phone as well. But the microphone and speaker right here. So go ahead, Shante. Do the best you can with the cold you're battling. And
I will. All right. So my name is Shante Duffy. I am the office manager at Madison Management Services. Today actually marks my 4-year anniversary with them.
Congratulations.
Well, thank you. Thank you. I'm sure you guys all got a heads up of what we will be discussing tonight. Feel free to ask questions. Stop me if I'm moving too fast or if you misunderstand anything. I'm here to help you guys and get you guys to learn everything possible. So I'm probably just going to dive right in. We sat and decided to highlight some topics to cover. So I'm going to start with the basic transfer process. Once you, the investor, purchases a note, once you purchase your note from your seller and the funding and everything has closed on that deal, your next step, if you haven't done so already, is to let the current servicer know that you would like your loan transferred to another servicer if you choose to. You have to give them your servicer's information, and then they are actually responsible for generating a Respa goodbye letter, which transfers the servicing of the loan specifically from their servicing company to another servicing company, whether it be Madison Management, FCI, SN, there's tons more out there. The new servicer, which means me, is required to sit and turn around and send out a Respa hello letter that matches with the goodbye letter that's sent out. It just lets the homeowner know, the borrower know, that we are the current servicer effective on that transfer date. How they're able to make their payments is sent in that package as well. Debt validation is sent in there, which they can dispute. They do have 30 days to dispute that as well. It's fairly simple. Other than that, the previous servicer is also responsible for sending in transfer information, such as all the borrower information, all the loan data. That usually comes over in some sort of spreadsheet form. It doesn't have to be specific to that servicer, but something very similar works just fine. And then once we have that information, we also require digital copies of the collateral file, which includes the note, the mortgage or deed of trust, the chain of assignments, and chain of allonges. We do at Madison Management, me specifically, review those files that come in. So when you send over your collateral, or if the previous servicer sends them over, we just require digital copies. We will verify and make sure that your assignments do line up. If there's anything missing, we'll actually ask you, and that might take some time for you to actually chase down your seller and find out what's going on if there is a break. So that's basically the basics on transferring loans in and out. Once everything's set to go, the loan is boarded, the hello letter goes out, and depending on the servicing program, depends on what option you'll be putting the loan under, and if you'll deal with an asset manager, if it's a performing loan where there's still an asset manager who monitors it, or if you choose to take the client managed route, which we will be discussing later. So again, those are the basics on just some loan boarding and the process it takes, and that's generally for all servicers, not just Madison Management. Like I stated, we do review the collateral. It's part of our boarding process. If there is anything missing, I'm actually the one to tell you, hey, this is missing, or we didn't receive this. This is how you could track it down. I won't actually track it down for you unless you need help or having zero luck. It's actually your responsibility to make sure you have that information. and that's at no cost to you. We can also house original collateral documents, the actual hard copy of the collateral file. We do house those at Madison Management Services. It's a $25 annual fee per loan that you have here with us. So I know some people do use a custodian such as Richmond Monroe. Their fee structure is a little bit different. We do record assignments. If they are not recorded by the time we get the collateral file, I will verify that with you. I won't just do it off of a whim, but I will stress to you how important it is, because you actually can't do much without it. Just to show that you actually own the note itself and it's recorded in the county. It also kind of needs to match up what's on the hello letter that we send out to the borrower. Richmond Monroe, what I do know that they do, and I've had some investors tell me this, is that they actually, if there is something missing, they do a lot of drafting. The only thing that we draft is the a satisfaction if you need it, or if you're selling your loan but it's staying with Madison. If you sell your note to another investor and it stays here with Madison, that's fine. We can help draft those as well. There's an added fee for that. And then, of course, if a borrower pays off their loan, whether it's a full payoff, a discounted settlement, we can do the satisfactions as well. I know Richmond Monroe and other custodians do that for you guys as well. It doesn't matter what servicing program you have the loan set up under. For us to do that, we'll do either way as long as the fee gets paid. We offer technically 2 different servicing programs, but we do offer a third one. First, we offer performing loan servicing. It's a $50 monthly fee. Those are for loans that are actually performing. With Madison Management, they don't have to be contractually performing, contractually current. A borrower can be performing but be paying back in past due payments. That is, like I said, a $15 monthly servicing fee. We'll send out the hello letter.
Hold on. Shanti, hold on 1 second. Can you mute Kate? You go to participant and mute Kate just so.
Can you hear?
Oh,
Yeah, she just muted herself.
All right, cool.
All right.
Wait a minute. Can you hear me now?
Yeah.
Yes.
But it says.
I think she's
And yeah, mute me from the admin side. I'm sorry about that.
Okay.
No problem. Okay. So like I said, performing loans, we send out statements, late notices if needed. Madison Management does do all tax reporting. We also report credit. We only report to TransUnion at the moment. Unless you tell us not to, we will continue to report. We send out 1099 forms to you being the investors, 1098 forms to the borrowers that had any payments coming in and were paying to apply to interest. Another servicing program that we have is the full collection servicing program. That's for non-performing loans. Under that servicing program, the loan's actually assigned to an asset manager. That asset manager will actually skip trace the borrower. We do this on every single loan that comes in, and do a bankruptcy scrub. Make sure that the borrower hasn't filed for bankruptcy between the time you purchased it and the time it actually got boarded with us. They will be your point of contact. They act as the middleman, as I like to tell everybody. They're the person that you'll get an email from me that I say, your loan's boarded, the whole letter went out on this date. Here's your loan number, and here's your point of contact. They will actually reach out to you. If there's any bankruptcies, they will let you know. If not, they'll also reach out to you and find out what your game plan is. What are some options you want to offer the borrower in regards to loss mitigation? We work off of you. So it's very, very important for you to let us know what you're thinking, and if you need help in certain areas, we can't make decisions for you. We can only do as you ask. I can't stress that enough, because we do have some investors that expect us to do everything and just use our better judgment, but that's not what we're here for. It is your loan, it is your investment, you spent the money into it. So we have to follow your outcome. Another servicing program that we do have is our client managed servicing program, which we also call no collection servicing. It's a $30 monthly servicing fee with us. Under that servicing program, we send out a Respa hello letter. We send out the statements, we send out late notices. The only difference is we are not the point of contact for this borrower. So if your borrower happens to call in under our client managed servicing program, we actually direct them to call you directly. Or if you have a third party doing your loss mitigation, that's something that you have to let us know when you first set up, so we know who to direct them to and who they need to call. There are some slight changes that on Madison Management side we are in the process of making. As you should all be familiar with, your loans should be boarded with a licensed servicer. And what I mean by licensed is that servicer should be licensed in the state of the property that you own. So if you own a property in the state of Georgia, you want to make sure your loan is with a servicer who's licensed in the state of Georgia to service that loan. If not, you need to go find someone who can. With client managed, the only thing is, since you would be handling your own debt collection, you run into some issues with debt collection licenses. There are some states as of right now, and I'm still currently in the middle of putting together a list by reaching out to every state to find out what license is needed by you being the investor. Because you as an investor who comes to Madison Management or goes to any servicing company is not covered under our servicing licenses at all. They cover Madison Management and Madison Management employees. That is it. Not our clients, nobody else, not the borrower. So if you choose to go the client managed route, you are facing some, I don't want to say issues, but a little bit of a hardship if you are not licensed. I know off the bat right now, the state of Georgia requires investors to be registered as a lender. And this also comes into play when you're trying to collect the debt as well as foreclose. Every state is different. I know in the state of Washington and Illinois, you are required to, if you even want to purchase a debt in those two states, you are required to be registered in both of those states as a debt buyer. Some states also do require you to be a debt collector if you plan on collecting on your own debt. Illinois is one of those states. What Madison Management is currently doing is requesting to see your proof of license in the states that we know currently require it, if you would like to purchase and do your own debt collection in that state. We've noticed some of our investors here with us currently, they're running into this issue when they try to foreclose. I have this one investor has a few properties out in Illinois, and he can't move forward with his foreclosures because of this licensing issue. He's not registered as a debt buyer. He shouldn't have even been able to buy those loans. So it's definitely something that you want to keep an eye out on and do your research on. Again, we're compiling a list, so once that list is completed, I will actually share it with Dave, and hopefully he can share it with you guys. So you can kind of go up and see, and at that point you might need to call each state and find out specifically what is required. It does vary. Some states depend on a first lien or a second lien. It can get a little messy. But like I said, I'll compile a list for you guys and send it over to Dave, and hopefully he'll be able to share that stuff with you guys. Under our loss mitigation services, we offer a few different exit strategies that our investors will work with our asset managers on for their borrowers.
Shante, real quick, just explain what loss mitigation is for those who are not familiar.
Okay, the best way I could put it, because I guess it's a little bit trickier to answer. The way that we put it, at least at work, is to find we use an alternative to foreclosures. We like to not foreclose right away. It's the different options and workout agreements that we can try to use to get the borrower to become reperforming, which could include a loan modification, forbearance agreement, temporary trial payment plan, even some deed and lose it, quick claim deeds and stuff like that we do as well. We try to make sure that you as the investor don't have to pay the cost of an actual foreclosure, because that can get pretty pricey depending on the state, as well as the time. That can be very time consuming. Specific states like New York, almost feels like it takes forever. So our asset managers will actually run through the options with you as to what you might want to offer your borrower, but you need to narrow it down for us. You need to let us know that you're not interested in any modifications and you just want a borrower to completely reinstate if that's what you actually want. Again, we work for you. You guys hired us. So going through those, there's a few different options. A lot of times we'll tell you what's best, or what might fit the situation. Sometimes it's not realistic. And the process that we do is we will talk to you guys, send out the borrower a financial application that gives them a breakdown, forces them to give us a breakdown of their finances, the amount of money that they bring in and the amount of money they spend on bills and everything else in their life, something as small as groceries and things that just, weekend fun, like a movie theater trip, all the way up to if they have a first mortgage or a second mortgage, car payments, credit cards, things like that. We'll get the financial application back. We also require 2 months of bank statements, as well as 2 years of tax returns, just to verify their income, and then, their most 2 recent pay stubs. We'll actually sit and go through that financial application with you. We'll break it down and basically give you an idea of how much they spend and how much they actually have left over to see if it's worth an agreement. Or not if it's worth an agreement, depending on what agreement you want to take. I know some people's financial situations currently could be bad, so you might want to put them in something a little more temporary that might lower the cost for them for, the next 2 years, and in hopes that they end up in a better financial situation if they want to keep their home. We do have investors that obviously modify their loans as well. Again, you can completely change all the terms on that, extend maturity, stuff like that. Then we have people who want to reinstate, whether they want to do a full reinstatement. I know some investors also forgive some arrears and things like that. Then we also have the route of deed and lose, and that's if we find out the borrower doesn't live in the home, they don't want the home, and you guys don't want to go through the process of foreclosure. We like to get the borrowers just to sign over that property so that you guys have it, and you can kind of do whatever you like with it after the fact, whether you want to rent it out, sell it, move into it yourself. I had an investor who did that himself. So that's definitely some of those options that you as investors are allowed to have, and of course getting into this industry to take advantage of. I do know that some people, including some of the investors that I have at Madison Management that I work with, use a third-party loss mitigation company. There's a few of them out there. I'm only really familiar with 2. They do similarly the same things that we do under our full collection servicing program. They'll reach out to the borrower, ask them the same questions: what's going on? Why'd you default? What do you want to do? Do you want to keep your home? What's going on? And just try to get a feel for them. Some of them I know do draft up agreements and things like that, but some of these third parties don't, which leaves some of my investors having to go to an attorney. Again, it's not a drastic difference. The only thing is, at that point, if you have to go to Madison Management for your client managed loan, and then to a third party to do your debt collection, and then to an attorney to do your loan modification, that can become very, very pricey. I actually just told one of my investors yesterday about this, because the same thing that your attorney is doing by drafting an agreement, a loan modification, we can do for you. At Madison Management, we don't charge you, the investor, for the loan mod or the forbearance agreement. We charge the borrower, because at the end of the day, it's you guys are doing them a favor. You don't have to actually offer them that they defaulted on their agreement. So it's really not too much of a difference outside of pricing, from my understanding. But again, it still adds up, because you still have to pay a boarding fee with any servicer. With us, you still have to pay a monthly servicing fee with us. But then you're also paying a monthly servicing fee to this third party. And their fees vary, from my understanding, after I talked to 2 of them. They vary depending on your situation. And then you have to go hire an attorney. So at the end of the day, it looks like you're spending way more money, when if you have it all in one spot and all in one place with Madison, it'll all get done, and you can kind of waive some of those fees, keep the cost down a little bit. Again, this is an industry that can rack up some fees very quickly. I personally would rather keep everything at one place. I think it's easier. Madison Management does have a web portal that you guys have access to 24/7, as long as you have a loan currently boarded. You can see the notes that we leave. So something as simple as the borrower called in and made a payment, or I sent out a letter, or the letter came back returned, everything is actually documented in that web portal. You can actually leave your own notes as well. We actually push for that in client managed loans. We have investors that like to handle their own foreclosures because they have their own attorneys. The thing is, we don't know anything that's going on with that. As a servicer, we need to know those things. So it's okay if you choose to use your own attorney, but we have to know everything that's going on every step of the way. Just in case one of the states comes to us and decides to audit us, things like that. This meeting's going to end out in 10 minutes. I don't know if you guys saw that as well. But I guess we'll keep going for those 10 minutes.
If we have to, what we do is we restart the actual conference. You just log back in and you
Yeah.
can have 40 minutes free, so.
Okay.
Use the link and then. Hey, you all about free. And for anyone that's actually in the webinar as well online, you can raise your hand and ask questions in the chat group as well. You can ask questions while we're doing this, but if we do get timed out to the link I put in the chat, just copy it, paste it to your computer, and then rejoin back up.
That works. Okay, so another thing that Madison Management does is we actively keep in contact with the attorneys that we use for foreclosure. Obviously, there's not going to be an update every day. That's something that a lot of people don't realize. Things do take time, but within every week to 2 weeks, we're at least getting updated by our attorneys or asking them for an update if we haven't heard anything. We like to stress that just so everyone knows what's going on, and there's not a huge difference of time in between. And just keep you guys updated. If there's anything that we need from you, we'll give you a call, shoot you an email, and request it. But 9 times out of 10, we're actually okay with it. If you have any questions, we're supposed to be able to answer those for you. So like I said, we like to keep in contact with our attorneys, especially during the foreclosure process. Approximately every week to 2 weeks, that's what our reps do. If you want Madison Management to handle your foreclosure, your loan has to be under our full collection servicing. There's no way around it. That's if you want us to handle it. If you have your own attorney and you choose to do so on your own, that's completely up to you. But it can't be client managed and have you using our attorney. We can draft agreements for you if you choose to do your own debt collection and just talk to the borrower directly yourself. I can't stress enough, though, that every single person that wants to collect a debt on their own needs FDCPA training. You need to have the basic guidelines as to what you can say to the borrower, when you can say it to a borrower, who else you can talk to, and the timings you're allowed to call, how many times you're allowed to call in a day, how many times you're able to leave a voicemail. If there has been times that I've seen investors getting sued because they're not following that. It's not worth it. And then once you get sued from that, the state comes after you. It's not fun. It's not pretty. It is very, very expensive. You can get this training almost anywhere online. Madison's actually trying to find a way to be able to provide it to our investors.
I'm going to wait for the end.
Hey, real quick, you had a question here.
Yeah, so I have a question. There was one of the services that you offered that you said that I guess it was a little cheaper if when the people call you, you give them our number, you transfer it right through to whoever the loan holder is.
Correct.
Right. So somebody wants to talk to me, right? I own the loan. They want to talk to me. They ask to talk to me. Are all bets off? I can say whatever the hell I want to them then?
No.
Okay. Good answer.
Absolutely not. You cannot say whatever you want. What you do,
They want to talk to me. I didn't call them. They called me.
No, any contact with them. Anyone who contacts them, whether it's a servicer, you being a lender, or a third party, they need
have it up in a class. You can put it in a class.
They need to be trained. They need to know what they can say, who they can say it to. You need to verify and validate who you are speaking with.
I have another
Yeah,
question.
I know. I've done that.
I have a question for you. You mentioned the training. Where can we get that training from?
As of right now, the only thing that I have found is it's online. It's about $99. We do the training every year as employees. We're trying to find a way that we can share that training with our investors, so you guys.
Can you send that list to David and he can give it to us?
Absolutely.
Okay, because I would like to take that training.
I would highly suggest it. I will definitely send, let me just make a note of that. Just because I want to make sure that, client managed again is fine, but it needs to be done correctly. Like I said, you don't want to get sued by the borrower, and you don't want the state coming after you, because there's times where people have been banned from purchasing stuff in a specific state.
Right. And how long is that training?
The training is not that long at all. If you can do it online, you kind of read through, follow video, and then you answer a questionnaire that I think has like 50 questions. And then you just get a certificate.
Okay.
You just print that certificate, save it, scan it, save it. When your servicer asks for it, just Shantae, I did it. Here you go.
Okay.
Here's
I
a
got
copy. And we'll just keep it basic. We just need to know that you did it.
Okay. If you don't remember to get it to David, I got your information. I will send you
I
an
think I
email.
have yours too.
All right. Thank you.
No problem. But again, debt collection training is a must. I honestly cannot stress it enough. It has to get done if you want to do your own collection, loss mitigation. I need you guys to know what it is you're doing. Because you can have a service with us, but we still get in trouble right along with you. Which is why Madison Management was thinking about getting rid of the client managed option. Just because of this. But instead of getting rid of it as a whole, we found that there's a lot of investors who are willing to get licensed or willing to get the training that's required. Another service that we do offer is Reo Services. It's not something that many people see or plan to do through us, because I think they like to do it on their own. When you foreclose on your property, the property reverts back to you. It leaves you with a vacant house. You got the tenants out, the borrowers out. You get the choice of, you want to sell it, you want to fix it up depending on the condition, or do you want to rent it out? We can help you with that. It is a $90 monthly servicing fee, whether you need to get a real estate agent, a property manager, a rehabber, whoever you need out there, we can actually do. But again, it's not used too much, because a lot of people like have a point of contact, and it's $90 a month. It's easy for you guys to manage your own real estate agent as well. So it's not too bad. But again, if you need help, if you need referrals to, let's say, a property management company that we might have in that state, we can help you out, and we can just pass along that information. Or we work with this company called US Best Repair Services. They do a lot of our securings of the properties, so changing the locks, putting a lockbox code up there. And then they also send somebody out who can handle repairs, give you a quote, give you a photo report. And they actually will let you know how much it is to fix the property out if you needed it. I've dealt with some REO properties that have literally been in the worst condition ever. I don't know how anybody lived in there to begin with, but this company does send out their crew and they fix it up. They are fairly priced and they're very detailed. So things that you might not have thought of, they definitely do. But again, that's US Best Repair Services. They're a great company to work with if you guys need it, and they're all across the country. They'll find crews for you guys. So definitely something that you want to look into and think about.
Cool. We're going to do is we're going to pause, get everyone to copy that link down. I'm going to pause this and we'll restart it up so we can answer some questions and finish up. I think a lot of people want to know more about that course, so we get that link afterwards. I'll send everyone. But let me stop it now.
Okay.
And everyone who's on the call right now, make sure you redo the participant part. If you have problems, send me a message on Facebook and we'll go from there. So I'm going to end it and we'll reconvene in a second.
Perfect.